Good morning, everyone. Thank you very much for joining me. This is our morning market review, and my name is Russell Shaw, Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. Today is Tuesday, it's the 1st of March 2022. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. Then I'll bring up the commentaries disclaimer, and we'll start off with the CNBC morning note and get into some analysis. Okay, here's the disclaimer on market commentaries. And our references, so I've got your MarketScope 2.0, cnbc.com, just for the morning note, and tradingview.com. I'm not sure if we're going to use that or not, but just in case, it's over there. And the headline reads as follows. European markets head for lower open. Russian armored convoy appears to head for Kiev. And European stocks are expected to open lower on Tuesday amid reports that a significant armored Russian convoy is heading towards Ukraine's capital, Kiev. Russia appears to have upped the ante in its invasion of Ukraine overnight, with reports and satellite imagery emerging of a long convoy, some 40 miles, 65 kilometers long, of Russian military vehicles heading towards Ukraine's capital, Kiev. The satellite images were taken by Maxar Technologies on Monday and show a convoy of armored trucks traveling sometimes 2 or 3 vehicles abreast on the road. Official sources have not confirmed the convoy, however. Other images from Maxar suggest additional military activity in southern Belarus, which borders Ukraine and is an ally of Russia, with ground forces deployments and ground attack helicopter units seen in the images. Again, official sources have not confirmed whether these units are preparing to join Russian forces in an assault on Ukraine. On Monday, there were unconfirmed reports that Belarus could be preparing to help Russia's invasion. Asia Pacific markets mostly rose Tuesday, while US futures also rose in overnight trading before the first trading session of March, as investors continue to monitor the fighting between Russia and Ukraine. Earnings in Europe come from Bayer, Covestro, HelloFresh, and Zalando. Data releases include German retail sales for January and final Eurozone manufacturing activity data for February. All right, having said that and read that, let's go through to our charts. All right, so let's start off with the weekly chart of the DAX. And what we're doing here is we're looking at the weekly chart, but this time we are looking at it in terms of zone analysis combined with the stochastic. And what I'd like to do is actually go back to the global financial crisis, and we'll do some analysis there, and then make inferences based on how the charts evolved in the global financial crisis, just to give us an idea of what we can be looking for with regards to current market movements. Now, there is a bias that I'm introducing here. It's called time series bias, I believe. It's basically taking a look at a snapshot in history. So in this case, the global financial crisis, and I'm applying it to current market conditions. That's a bias. And it implies that the economics are very similar between the two periods, which of course is not the case. I think the economics were very, very different. However, I think that the progression of the charts will be very helpful in giving us some measures to keep an eye open for. So what I'm suggesting is that I don't know if the markets are going to progress as they did in the global financial crisis. I'm not suggesting that in the least. What I am suggesting is that we've got some measures that we can use to assess just how severe the current market conditions are. So with that said, I'm going to zoom in on, sorry, I'm sort of a bit behind here. I'm going to zoom in on sort of 2007, 2008, 2009, and then we're going to take a look at that with regards to the current market. All right, here we go. All right, so the global financial crisis, we all would agree, was a bear market. So let's take a look on this weekly chart just to see how the bear market unfolded, and then draw similarities, understanding, and it's very important that we don't want to get locked in some sort of hypothesis that the markets are going to evolve exactly the same way. That's not possible. The economics are very different, but we'll watch how they do progress. So going all the way back to June 2007, you can see here is, I guess, the first real crack. So what happens is we get a movement from zone 1 into zone 2. Okay, that's, I think, the first real crack. At this stage, the market is really, I think, oblivious to what's about to take place. Hindsight is, of course, 2020. At this stage, well, it just looks like perhaps a normal correction. So we're going to move forward to the 19th of January roundabout, and I think this is where the real severity starts. So we get a movement from zone 1 into zone 2. We're going to label that 1. Okay, so that's label 1. What we'll do is then we'll look for the movements from zone 2 into zone 3. We'll label that 2. Okay, and here we get the first sort of 1, 2. Okay, so think about it as a sort of a boxer connecting beautifully, sort of the jab and then following up with a straight 1, 2, rocking his opponent, right? So here's the 1, 2, and then take a look at what's happening to the Bollinger's. Okay, they're starting to expand. Okay, so there's the real danger. Now, this in of itself is not acting in isolation on a technical basis. We've now got the stochastic, which is heading south as well. Okay, so we round about this point. So we're heading towards the 20 area. Now, what happens next is the upper Bollinger, so the top Bollinger, actually turns down. So now it starts following price downwards at a time when we have the stochastic starting to oscillate around 20. So let's just try and reinforce the what's happening here with the global financial crisis. 1, 2, so there's that kind of double punch. Expansion of the volatility, the momentum sinks to the weak 20 on the stochastic, and then the rolling over of the Bollinger. Okay, once that Bollinger rolled over, that completes the cycle. Okay, then what happens is we come towards March. So this is in January. We have February, so it's a sort of a lousy January, February. March, it looks like the markets are making a comeback. This is now a classic bear market rally. Okay, so this is where the damage is generally done. Okay, so the first sell-off, the first completed cycle, certainly seems to be showing signs of weakness, but then we get this bear market rally. A whole lot of money gets reinvested allocated back to the markets. Now we look at the second cycle. Okay, one, here's your double, sort of your double tap, right? 1, 2. Okay, there's the boxer throwing the jab and a follow-up. We managed to kind of hold some sort of consolidation for a couple of weeks. Okay, and then take a look at the volatility expansion here, right? The Bollinger's pull away from one another. Take a look at the momentum. Okay, here's the momentum, and now this momentum. Now look how intense it is. So for a huge period, so going from September, not even September, so going from July 2008 all the way to February 2009. Look how we just hug the lower quintile. But when does the cycle complete? The cycle completes when the Bollinger turns down, and that's the end of the cycle, and we get the next real crash in terms of the bear market. So that's how the global financial global financial crisis unfolded. Yeah, and then Pete's just saying, watch the suckers rally. That's where the damage gets done for these bear markets, because we've still got hope. Remember, we did the cycle where there's that renewed confidence, improved earnings, rampant speculation. The first part of the bear market, I call it was the loss of confidence. It's actually not called the loss of confidence. It's called the abandonment of hopes. So perhaps the hopes only get abandoned into the second round of that sort of 1-2. You know. Now let's go through to the current market. All right, and let's take a look here. So here's the first weakness, 1. Okay, here's the follow-up punch, 2. Okay, take a look at stochastic. Okay, take a look at stochastic. It's approaching that lower quintile. Okay, so now that's what we've got to watch. Take a look at Bollinger's. Okay, Bollinger's expanding, right? So you can see that we are in a bear cycle according to these measures. What we can say, if we're using these measures, the cycle hasn't completed, okay, because the top Bollinger hasn't effectively turned down. So that's really the completion of the cycle. And what we can do, just put a sort of a red line here. So we'd need to see that sort of upper Bollinger turn down to complete. So the bear cycle is not complete. So we've kind of got a map here, what we can look for to see how much worse the situation gets. Now, remember, the idea here is we said there's a bias. And I've got to be very careful. We've implied that the market is going to unfold like 2008, and that's not necessarily the case. We don't know if that's the way the market's going to unfold. There's the time series bias. So it's my fault. I've kind of subconsciously sort of implied that we're going to now wait for the cycle to complete. That's not the way the market may go, but we may see a jump back into zone 2. Okay, in other words, we may see we may not see the completion of the bear market cycle by these measures. We may see a buy the dip coming in, and we may see a movement then from zone 2 into zone 1. But again, I don't know that either. Okay, we're flying blind here. We don't know whether there's going to be a movement from zone 3 into zone 2, from zone 2 into zone 1. and we don't know if there's going to be a completion of the bear cycle. But at least we've got a map now to watch if things are improving or if things are getting worse. Now let's just assume that market conditions do get worse. Let's just assume that market conditions do get worse. Let's just assume that the upper Bollinger rolls over, and let's assume that it completes the bear cycle. How much further down do we go? How much further down do we go? Again, that's a big question mark. And we're going to go back to 2008. And I want to remind you guys to watch for the sucker rallies, right? Those bear market rallies. So let's just go back to 2008. All right, so I'm just bringing it across. And so the first 1, 2, that boxer, jab straight, knocks the market, it reels, but then we have this here, everything looks like it's resuming, everything looks sort of normalizing. We all see that it's a market that could be potentially representing good value, and then we get the next 1, 2, and that's really where the damage is done. So after that, as Pete says it, that's sucker rally. So again, I don't want to infer that's what's going to happen here. I don't know if that's what's going to happen here, but we've got the map to measure. So if we go back into neutral, and if we go back from neutral into the bullish area, well, what would be the next bullish development would be the expansion of the Bollingers moving up and the lower Bollinger moving up. So that would give us some confidence. We never really got the movement in zone 1 here. It hits zone 1 and then capitulates almost immediately back into zone 2. There's 1. Here's the 1, 2, and then we have this real sort of reckoning in the market. So that's the inference. We must acknowledge that this is a completely different environment. How it unfolds is going to be a study in of itself, but we've got the map here. So having said that, let's just take a look and see what's happening on the market for today. Is there any opportunities? So I'm going to just change this down from weekly to daily. And of course, it won't be a surprise to see that we're still very much in the bear market, even on the daily chart. Let's just clean this up. All right. So you can see that we're in zone 3. I mean, a convoy heading to Kiev that's 65 kilometers long, that just chills me to the absolute bone. You know, I'm not, it's just a terrible headline or news item to read. But you know, we're zone 3. We've got this 65-kilometer military convoy heading. We've got a buildup of military on Belarus that, you know, I think logically we all know that they're going to join the fray. And we have the stochastic really in the weak area. Okay, so given that, let's go down to the hourly chart here and see what's happening. Okay, let's clean this up as well. Can you guys hear those birds in the background? We've got these birds called hardy-daws. They are extremely loud, to say the least. All right. Yeah, and I can hear it. All right. Let's just take this out. Keep that indicator in. Take this out. Keep this out. Are they pretty? I think the way to answer that, and as they're pretty in their own way. take that how you want, but they're quite large, sort of the size of ducks, I would say, and they are extremely loud, and they tend to make these huge sounds right at the beginning of the day and right at the end of the day, you know. So, let's take that out. Yeah, let's take that out. All right, so we've got this market rhythm. Let's just take a look at this in terms of the market rhythm. Okay, so we've been looking at this in terms of 1, 2, 2, 3. Okay, got these 1, 2, 2, 3. Okay, here's the 1, 2, 2, 3. This is that pickup into Friday. Okay, here's the gap down. And now it looks like it's moving here. All right. So clearly, I think the R1 levels. So Chris is just saying the peak is 3 days long, like an ibis. Do I know David Attenborough? Yes, I mean I watch his shows often, but not for a while, but I do know yes, Pete. Let's just take a look at R1 as our first level here, guys. Here's our first level. And you can see this is, I think, quite a decent level for us to keep an eye on, right? Sorry, I've got the wrong thing here. We've got the support. Okay, then that support holds, it breaks, it becomes resistance, and we're now heading back towards this resistance. I am very nervous about this market. I want to see price break the R1. I want to see the stochastic hit the 80 and hold. And of course, I'd like to get the daily chart to move into zone 2. Okay, once we get there, we can do a reassessment. But I'm of the opinion, I've got to just watch this. I'm actually on the 4-hour chart. I'm going to change this to the hourly. But on the 4-hour chart, this R1 level, that we've got to just be very cognizant of this resistance area. I'm begging your pardon that I'm on the wrong time frame, so I'd like to just go down to the 1 hour. I hope I'm going to pronounce this right, Anna. Anna's just saying she's waiting for the hoopos to come and nest in the village church this year. I hope I pronounced that right, Anna. That actually sounds lovely. All right, let's just go to the hourly here. So the hourly and the 4-hourly are fairly similar. Again, I'm going to just reference. Sorry, that's the wrong thing. I'm going to reference. Got you. All right. So Anna's saying she's doesn't know the pronunciation quite either, but they're due to start nesting in a village church, which is terrific. All right. R1 is clearly, I think, the level to watch. Watch the stochastic here, guys. Does it 80 and does it hold? It's no good hitting 80 and falling out. If it hits 80 and falls out, that's the upwards pressure disappearing. That's the geopolitics instilling the risk-off sentiment. it's got to hit 80, it's got to hold. This is a very dangerous market. We've got the resistance above us. We've got just unreal. It's unreal geopolitical situation in the moment going on. The daily chart in a very weak area. We've got the daily stochastic in a very, very weak area, but we've also got the exact same on the. We've also got the weekly chart looking very, very weak indeed. We've got this gap down here. Remember, we talked about exhaustion, or is it breakaway? Well, at the moment, there's still a good chance there's a breakaway gap. So we've got the 1-2 right. Now we just want to see how it progresses. It's a very, very difficult situation. You know, to be quite honest, it's very the news is quite depressing. I think it's very heartbreaking. My heart goes out to the Ukrainians, and we just got to watch how this develops. The sanctions we spoke about yesterday did have bite to them, and we're going to just see, I guess, how this unfolds. But the technicals certainly seem to be reflecting some real risk. Let's see how this plays out. Any questions there? Anna's saying those are the most exotic looking birds that we have. I wouldn't say the haridars are all that exotic, as Chris says. They, if I understand, Chris, similar to the ibis, isn't it? Similar to the ibis. But gee, they're loud, especially when you're trying to sleep. All right. No questions coming in. What we'll do is let's take just before we conclude. Let's just go through to oil. Let's just do a quick analysis of oil using the weekly zones. All right, so take a look here. Okay, so take a look here. We are in zone 1. Okay, we've got a very strong looking stochastic. I think it's not quite the same analysis because we're not looking at a bear market here. We're actually looking at a potentially sort of strong bull market. But of course, the higher the energy goes, the higher the oil prices goes, the tougher it's going to be for us at the petrol pump, inflation, etc., etc. Is looking pretty strong. What could happen here is look for the completion of the cycle to see if the bottom Bollinger turns up and catches up with the trend. And it's just asking for a similar analysis on Bitcoin, and we'll certainly do that. All right, so this is the weekly for Bitcoin. This is actually, I would imagine, a fairly good sign for Bitcoin. Let's carry on. Let's carry on watching this. So this is very interesting. So we're on the border of zone 2 and zone 3. Okay, so now the big question is, can Bitcoin push into zone 2? And then of course, if it pushes into zone 2, that's bullish. And it's saying because of the conflict between Russia and Ukraine, the Bitcoin is starting to be used by Russians and Ukrainians outside the banking system. So perhaps that's got something to do with the big blue candlestick here. So what we can look for, remember this is a weekly chart. Look at this trough, peak, okay, higher trough, okay, and then we're going to put your HP question mark. But if we get that HP and we can take out the question mark, then we've got an uptrend here, moving out of zone 3. Of course, you know, don't forecast it, don't predict it, don't preempt it. Let that HP materialize, let the movement, because this week's not complete yet. We're only on Tuesday. Okay, let's see how the Bitcoin is at the end of the week. Is it firmly in zone 2, or is it faded back to zone 3? But so far, this looks quite encouraging. All right. Any other questions there, guys? All right, let's wrap up here. You've got my email address, and then we will chat tomorrow. Tomorrow we'll also crypto. So we'll do the morning review, 20 minutes. Then we'll go on to a crypto minute after that. Thanks very much, guys. Have a great day, and speak to you soon.